StockTwits Nation. I'm Katy Perry, and we are here at the Gateway Conference in San Francisco. I'm here with Scott Liolios, the founder of Gateway Group. How are you doing this morning, Scott? It's great to have you kicking off our show today.
It is great to have you here. We started doing this in 2012, so to have StockTwits here, we're excited about the day, or the 2 days actually. A lot of great companies, and this is our marquee event, so we're excited.
All right, so for everyone tuning in at home, I'm going to talk to Scott here for a little bit about what's going on at the conference. We'll give you a preview of everything we're going to bring you over the next couple of days. Then we're going to get into some market headlines as we always do. Tom Bruni, editor-in-chief of StockTwits, is going to stop by, give us an insight into what's going on. I know we have some updates from Opendoor, the Klarna IPO, lots going on this week as we head into September. But first, Scott, let's talk about why we're here today. You've been doing this conference for 12 years.
If you take out the pandemic, yes, since 2012, we've been doing this conference.
Okay, so what a different time that was. I think Twitter IPO'd in 2013, Reddit investing maybe not even a thing. What has changed the most since you started the conference back then to today?
What has changed? Well, so when we started the conference, I have a background from investment banking. I've been an institutional salesperson. I've run a hedge fund. And the one thing I learned through all that is that companies are always looking to attract capital, be it in the open markets or privately. And I also understood that companies and investors are always looking for new, unique ideas. And so the idea behind this conference was to really create an independent environment where you can get great companies and portfolio managers together, where they really get a chance to engage and build relationships and tell a story and create a narrative. And that was really why we did it. The biggest thing that's changed, to answer your question, then, is that really is the growth. When we started, I think we had 35, 40 companies, and I was so nervous nobody would come. and as we built this up since 2012, it's really become a brand of its own. It really is an opportunity for us to show who Gateway is and how we operate. So the biggest thing that's happened is that it's really got a lot of people behind it and a large attendance now over 2 days.
Amazing. Yeah. Tell us a little bit about the companies that are here today. I know we got a lot of growth companies, some sectors emerging in terms of where people are coming from. What are some of the spots that these companies are representing, and who are some of the companies that our viewers and your guests this week will hear from?
Well, it's a pretty diverse group, generally speaking, but at Gateway, at this conference, we've always tried to be on the cutting edge of what really investors want to hear, the thematic approach. Back in the early days, we were very early on clean tech and trying to bring, thought leaders in clean tech and companies that are innovative in that world. And we were very early on in the SPAC craze when that was coming through, and had some panels and speakers who really kind of educated the group on that. In the last couple of years, we've been focused more on AI and crypto, because that's really what investors want to hear. And so we have several companies that are on leading edge from Bitcoin Depot, Amprius, Applied Digital. We have, UTI, University of Technology Industry. So there's several companies in that space that really investors want to hear about.
Very interesting. And when you think about the types of content and themes that you anticipate will come up in these, I know there's panel sessions, one-off interviews. I mean, you mentioned AI, crypto. In terms of how IROs, investor teams think about connecting with institutional and retail investors, what are some of the themes you think that are likely to come up this week as we're here?
Well, all markets progress, right? So, I think back in 2016, we had some of the early Bitcoin miners like Marathon and Riot. Those were companies that were very early on. We're getting a lot of inquiries now more about some of the secondary and tertiary services around that, about actually token coins, people launching new coins, and some of them have themes in themselves. We have one client, it's called Anime, which is an anime coin token just specifically for that. So really, you just have to stay on the front edge of that and make sure that you're listening to the investors, you understand what the community is, and see what people want to hear, and bring them to the conference.
And when we talk about what Gateway Group is all about, you've been around 25 years. A lot of companies evolve over time, and they're sort of serving a similar purpose, but changing the ways they're doing it over time. So I'm curious what you're hearing from your clients. What are they asking that's new or different, or what are some of the new challenges or opportunities they see that they're really entrusting in you all to help them navigate?
Well, it's amazing how much the market has changed. I mean, our DNA and our legacy was always institutional, right? With an institutional background, I really felt that it was our job to, bring value to that whole relationship, not just answer questions, but really be able to analyze our companies and have deep conversations, really a mind of an analyst. That's how we approached it. And over the years, you started hearing clients ask, well, what can you do for retail? What about retail? And it just kind of something that was burning as we thought about it. And we really have spent a lot of energy and invested time to figure out how to attract that audience. So the biggest change that I've seen, and really I think going forward, is this huge audience of retail. It drives a lot of the daily volume. It's a big portion. I read a stat the other day that said that stock trading apps have grown at 20% every year since 2016. And now there's 120 million stock trading apps. Well, that's an asset class that I think most IROs and even companies can't ignore. That's pretty relevant to this world.
It is fascinating. You had Robinhood pave the way, and then now even in the public markets, you have eToro, you have Coinbase, you have Webull.
Yes.
It seems to be almost an insatiable appetite. I think I read a JP Morgan study yesterday that the average 18-year-old is like 6 times likelier to be investing, which seems so different than probably when you started your career. When you think about this new audience, what kind of challenges does that bring a company in terms of how to get the message out there? We're obviously here today bringing some of the content, which is great, to our viewers. But what are companies thinking about in terms of how to get these messages and connect with the retail investor?
Well, back in the days, a company would announce their quarter results. They put out a press release and maybe do an earnings call. What's happening now is you have to go to where the investors are. And you really have to build a strategy around the community that, quite frankly, StockTwits have done. I mean, you guys have 10 million active engagements. That's phenomenal. And if you're an IRO or if you're a public company, you need to think about a strategy to create your narrative, tell your story. There needs to be thought leadership, and it needs to be all channels. And that's really where I think that companies need to go. I don't think it replaces the institutional. I don't think it replaces what we've done in the past, but I think it definitely is additive.
Yeah, and when you think about the conferences like this, when you first started, a lot of great opportunities for one-on-one conversations, people really to connect. When you think about retail investors that are looking for that connection, what role do you see digital playing, social media, streaming, things like this to sort of make that connection possible when it's one-to-many instead of one-to-one?
Quite frankly, it's an opportunity, right? I mean, the one-to-one is great. You can get an investor to take a significant position. We used to say we always try to get investors to take a 3 to 5% position. But when you think about the younger digital-only apps and everything we just talked about, you have to really create a situation where you can leverage that from webcasting to going out to all social channels and making sure you're building some sort of digital footprint and controlling that narrative. Because if you don't, there's going to be one built for you. So you might as well control that narrative and make sure you're out there and being proactive on all fronts.
Yeah, speaking of that, we've been following the Opendoor, I don't want to say saga because it's an interesting, the journey. And Eric Jackson was on our show. He was just in
Really?
SF yesterday, and meeting with the team, and it's been amazing to see that sort of groundswell of interest. And one of the things that I think is interesting about that movement is how focused those investors are on really digging into the business. And it is a meme stock, but they do want to understand, okay, what is this segment? How much money does this make? So you've been in the space for a while. For a retail investor who's looking to think like an institutional investor, what advice would you give them in terms of how to think about investing in these companies and maybe up leveling the way they're doing so today?
Well, it's amazing how sophisticated the retail investor has become. I used to say, we're not talking to, there's a Mrs. Jones that said at 2,000 shares for a dividend. Although that does exist and has value, these investors are smart. They're young, they're digital. There's so many areas to gather and ingest information. And I would say the best advice I would give them is that try to think about how management values the company. Too often, I think people use traditional metrics, EPS, market cap. I think these investors need to dig in a little deeper and really figure out what gets management excited. What are those alternative metrics? And it could, depending on the business and industry, it varies for every one of them. So educate yourself on what are the key metrics in that particular industry and how are the companies measuring up to what those are. So if you listen to the calls and you listen to the narrative, many times management will tell you how they value the company. What are they getting excited about? And not just EPS. It's really the story behind that. What are the metrics? What are the precursors to those that you can kind of be ahead of the curve and understand what's happening? And I think that's the best advice I would give a retail investor who wants to think like an institution.
I think that's a great piece of advice. A lot of retail investors obviously get news alerts. It seems like there's investor conferences happening a lot. This company they invest in is here, they're there. And understanding how to think about these things. Obviously, you have skeptics saying, oh, it's just a bunch of people at a beautiful hotel having a nice catered lunch. But what you're trying to say, I think, is reading between the lines of what are they focused on, and what is the message that is the through line across everything they're saying, areas of focus, and where they see the business going forward. And so, for people watching at home, is the recommendation to really pay close attention to what these companies are focused on, and look at that through the lens of your long-term investing. Is that a good way they should approach something like this?
Yeah, I would say, the SEC requires them to make certain disclosures and they have to do it, and they do that. So to your point of reading between the lines, what are the other highlights? What are the other things they're telling you are important as they're trying to build this market? Are they, from market adoption to, and again, it does vary from a particular industry. And also I would say that read the body language. Sometimes the numbers are the numbers, but you can tell a lot by just really listening and reading how a executive is talking about their story. And it tells a lot.
I'm glad you brought that up. I want to stay on management for a second because this is something I'm personally fascinated in.
Yeah.
We talk with dozens of executives. It seems like the skill set or what's required of the management teams today versus when you started Gateway seems quite different. Obviously, charisma has always been important, ability to influence people. How has retail investing, digital, streaming like this, how has that changed what's required of a CEO, CFO of these companies?
Well, I think it's very much still changing, right? Yes, management's first and foremost requirement is to build shareholder value. And traditionally, when we think if I just build this business, they will come. And that just isn't real world anymore. And so, yes, I think the skill set of a management team has grown and they have to learn how to communicate. And that's very important. And so it has to be very much a key component of running a company is not just executing and building a team and getting the company to execute, but also the communication of that and teaching people what is important and what's going on. And I think that's very much part of it. And so as this world has changed, it's going to require more from the digital side, the more of the thought leadership, the more of the social outlet, and going into communities and just teaching everybody, kind of evangelizing what you're trying to do.
Yeah. Does that come up often in conversations you're having with clients and prospects where they say, hey, I want to be like Alex Karp. I want to be like this person. Or is it more about helping them understand where they're most authentic, where their strengths are? What are you hearing from these management teams that are looking for guidance?
Well, you do get an occasional CEO who wants to be the next, Elon Musk. But to be honest, what we do is really, I think you hit on a key word. Really, just be authentic. You don't have to be the most charisma. You need to build trust with your stakeholders, and I think most people see through that. It's just, you just have, and you have to be natural in your own personality too. So the skill set can vary tremendously. Just be yourself, but be genuine, authentic, and transparent. And I think that's the best advice I would give them.
Yeah, we're in the comments all the time in StockTwits. We on the show we get so it's interesting the real-time feedback we get to executives. And you're right. I think cool factor. You can hold it up here. It gets headlines. Alex Karp's going on CNN. But authenticity and credibility. I think knowing the ins and outs of the business in a way that really demonstrates to retail investors, where to steer the ship. That seems to resonate the most with retail. And I assume that's what resonates with the institutional crowd as well.
Yeah, I think that's true across all investor base. You need to have those same characteristics. What I like about your ad is your whole sentiment. I mean, you get real-time thought on how the investors are seeing the management team. I find that fascinating. It's such an awesome tool you guys have created. And so right there, you get to see how investors are digesting and interpreting what you're saying.
Yeah, I feel like if I were on some of these companies, I would look there often to see, because it's a daily readout.
Yes.
You can announce something, you can make a move and see quickly how things might shift.
That real-time feedback's valuable.
Yeah. Let's talk a minute about the attention game, because there has never been more competition just for getting eyeballs, attention on the internet generally. You're competing with, reality TV, sports, and then within IR, a lot of companies in the space making noise, especially if you're a small cap or a growth company. How should these companies be thinking about telling their story or kind of breaking through the noise when there's just so many companies out there trying to get in front of the same group of investors?
Well, there's a lot of ways to do that, as we've talked about. But I think it's important to bring in a professional, like anything else in this world. If you hire a consultant or bring somebody who understands that world, can help you navigate that, I think that goes a long way. CEOs are very good at running their company, but there are people like Gateway who can help you navigate that and kind of control that narrative. And I think that's probably a very good investment for most companies, to bring in a professional to help them navigate that and break through that noise and get that attention.
And finally, let's talk about the next 48 hours, because there's a lot going on. What do you hope that attendees on the ground here and people watching at home, what do you hope that they get out of this first? And then what are you most looking forward to hearing? Could be certain trends, themes, individuals.
I really hope for us, it's about relationships. So the number one key goal for us here is the experience and relationship. I just love to see companies and investors connect, and they get to know each other. Our meetings, our one-on-ones are very packed. If you come here as a company, you're going to get several meetings. And what's unique is that you're not just, you go to some of these conferences, you do get some investor meetings, but you're being sold stuff too. You have vendors and bankers. And what is here is real relationships, real investors who really want to know. We know these investors, been doing it for years. Getting to know an investor, their children, where they traveled from, who they are. I think that's what I want people to get out of the whole experience and that connection of one-on-one and building on those relationships. That's the number one thing.
Well, Scott, I want to give you guys at Gateway Group a ton of credit, because a lot of things we hear from our audience is we want access. They feel like a lot of these conversations are happening behind closed doors. We have a camera crew here all this week. I think we're talking to at least 8, maybe more executives over the next couple of days, and also doing the show. And just appreciate you doing that. I think it's a bold move. I think it's an important move, and it's something I know our audience really appreciates. So thank you so much for allowing us to be here.
You're welcome. I think it's a very important group that we all must kind of take serious and really open the doors and be transparent.
All right. Well, we're going to be here all week at the Gateway Conference. As I said, we'll be here tomorrow morning doing the show from here, multiple interviews. Scott Liolios, thank you so much, founder of Gateway Group, for inviting us in. We're behind the scenes, guys. We're going to take a quick shift now, and we're going to go into today's market news and headlines. We're going to bring in Tom Bruni to help us out with that. Tom is here. Tom, how's it going? What are you seeing this week in the community? I know it's been kind of a weird week because we had that holiday on Monday.
Yeah, Katie, thanks for sitting down at Gateway. Learned a lot just from kind of that interview, and very interesting what they're doing for the IR space, and super excited to kind of see the coverage from down there. But speaking of storytelling, we've got Opendoor, we've got other meme stocks, GameStop, not quite AMC, Snapchat, a bunch of others kind of popping up on the radar yesterday, despite the down day in the market. So a lot of interesting dynamics happening there. As we mentioned, Eric Jackson was out in San Francisco yesterday. He posted an update on Twitter, basically saying he's met with the Opendoor management team, basically filled them in on what's happening on the ground from a retail perspective, sharing all the ideas, sharing all the capabilities, and really trying to solidify that relationship and move the company forward. So it's a great kind of time from a IR perspective to be talking about this. Opendoor is kind of case study number one for how companies should be kind of engaging with retail, and we'll see if Eric Jackson and the group of retail traders over there can continue to push things forward at Opendoor. But yeah, overall, seeing a lot of just general hype and
Yeah.
price action improvements across all the meme stocks lately.
Yeah, Tom, I was
And
on the plane last
that-
night following Eric's tweets, and I feel like he breached the walls of the enemy fortress. I don't want to say enemy, but they allowed him in. They had him there for meetings all day. He was making some bold statements. He said, leadership made it clear they're listening to retail investors. He said even some of the people he met with cited some of the ideas that people had been sharing on social. And so he really sees this as a big opportunity. He also said they talked about Drake, which again, like we had him on the show. I thought this was a joke. I think it still is a joke, but I don't know. The bid is becoming reality perhaps. But it is a fascinating case study to see. And it's so indicative of why we're here at the Gateway Conference, of these blurring of the two worlds that were completely separate before. And now you have activists, retail, literally in the same room. So it's been fascinating to watch.
Yeah, he said in his tweet that they see this as God's plan. So shout out to shout out to Drake. I don't know if we see that in one of their SEC filings, I'll know it's real. Like in their next 8K, they're like, listen, we're making some changes at the company. And by the way, this is all God's plan. Shout out Drake. If we see that, the stock will definitely moon because that would be wild. But yeah, I just found it interesting. Bed Bath and Beyond relisted yesterday. So just for people who didn't follow this, Bed Bath and Beyond went bankrupt in 2023. Overstock.com bought the naming rights, tried to rebrand the website, whatever. Didn't see a ton of traction, but anyway, they kept the name. They moved to ticker symbol BYON, which was Beyond. And then yesterday, they finally relisted as Bed Bath & Beyond again. So we have completed the full meme stock arc, and we have Overstock.com now back as Bed Bath & Beyond, BBBY. So full circle, kicking off the meme stocks.
There's a lot of that happening lately with big corporate changes only to be reversed later on. Obviously, we're not even going to get into Cracker Barrel. That was last week, but also Kraft Heinz. So Warren Buffett brokered that merger, I think, a decade ago. And as of yesterday, they're now, I was really hoping it would work out for them. I saw a future with Kraft Heinz, and now they're separating, as they say, they catch up from the hot dogs. So that's a news story we're tracking. We also have a sell-off in the bond market. So economists saying investors are questioning central banks' ability and willingness to keep inflation in check. We're staying tuned for the big Fed meeting on the 16th. Tom, looking at the bond market, what are you seeing there that's new or different from maybe things we might have been noticing earlier in the summer?
Yeah, so last August we had the Japanese Volmageddon, where basically the yen carry trade was kind of unwinding, and we had this whole sell-off for like a week or two period. People are looking for not something similar, but they're flagging the U.S. bond market as something odd to keep an eye on. So if you look at 30-year Treasury yields, they've been kind of staying stable, just under 5%, and are starting to inch back higher above 5%. Meanwhile, the 10-year, the 2-year, the 3-month, like those are all falling. And so it's kind of the market pricing in, hey, we're going to have short-term cuts to interest rates. We're expecting interest rates to come down. However, we expect longer-term inflation to stay pretty sticky because they're not, they're keeping yields on that long end of the curve high. So it's again not necessarily a situation where we're going to have the yen carry trade happen again, but again, it says a lot about how investors are pricing in kind of the Fed's next move. If we don't get a cut in September, that's going to be a major surprise for the market. Everyone is kind of positioned for that. We'll get some labor market data this week. And if we see a further softening, then that will kind of lock in the rate cut for September and then potentially put October and December on the table as well. So, yeah, big week for the labor market and the bond market. It's one of those things where people won't pay attention unless it's really good or really bad. If it's just kind of in the middle, like there's more exciting stuff to talk about than initial jobless claims and all that. So we'll see if people care about it. But yeah, those are the major economic points to watch this week.
Yeah, and also we're watching just sentiment overall. Scott was here mentioning the sentiment checks on StockTwits. Always interesting to hear somebody from the institutional side of things talking about social features within StockTwits that are interesting to them. But let's talk about the mood, the vibe. We're all back from Labor Day. I think there's sort of a feeling of waiting for the other shoe to drop, I guess, in terms of September performance. Historically, September is not a great month for the market. How are StockTwits members feeling right now about where the S&P is headed this month?
Yeah, people are generally positive overall in the market, but they are expecting a down move during September. So I think the poll we put out yesterday, 60-ish% of respondents were expecting the market to be down in September. And by market, I mean the S&P 500. Half of those were looking for a 2% or more decline, and then half were looking for just kind of a 0 to 2% sell off. So historically, the average decline is just over 1%. We all know that averages never really work out in markets. So people are paying less attention to the overall number of the decline and saying, hey, we've had a good run. We're entering this seasonally weak period. We've been kind of de-risking or shifting our risk over the last couple of weeks ahead of this. And yesterday's kind of sell-off was maybe the initial signs that September could be a bit rockier than previous years.
And speaking of volatility, we kicked off with this conversation talking about Opendoor, but want to go back because meme stocks seem fully back. I've seen multiple articles with basically that headline: "You lived through 2021." This feels very familiar. They never really went away. But outside of Opendoor, what are some of these other tickers companies that are getting a lot of buzz, either within StockTwits or just within retail overall, that you have on your radar, Tom?
Yeah, we'll stick with a couple like brand names. Again, depending on who you ask, the definition of meme stock will change. To me, and at StockTwits, we kind of view it as a situation where there's a lot of retail chatter attention that is driving a stock price far away from its fundamental value. So there's a disconnect in kind of the underlying company. People pay attention to it, and that kind of drives, further price discovery in the stock. So the point being, GameStop, Snapchat, American Eagle, these are all kind of brand name companies that people are again looking at and saying, hey, these stocks have been beaten down. Snapchat and GameStop especially, they haven't done much in a while, but maybe there's an opportunity here for some small appreciation if the company gets a couple things right. And so those are the few that I'm seeing pop up. Snapchat was an interesting one. I think late last week it was one of the top trending stocks on StockTwits. I forget the news why, but GameStop is another one. It's been in kind of this short period of like volatility compression where it hasn't moved up or down significantly in over a month. And we finally saw that break yesterday. It was up 5 or 6%. It's up again this morning. So again, I'm not really sure why we're seeing kind of this resurgence, but there's definitely some of the traditional meme stocks that are catching a bit again. And again, people are looking for brand names that are beaten down and saying, hey, I don't necessarily know if Snapchat's going to be the next Facebook or anything, but maybe it won't be a zero. So that's what people are betting on. And we'll keep an eye on it the rest of the week.
It is interesting to see which ones are getting the attention and why. Obviously, Opendoor, Eric Jackson's tweeting like 50 times a minute. He's
Yeah.
literally stalking a hip hop artist. Uh, for legal purposes, that was a joke. Love you, Eric. American Eagle is obviously trending. They had the Sydney Sweeney, Travis Kelce. There's reasons there in the news. But to your point, Snapchat, this one's always confounded me because it's just a beaten down stock. It's one of those things that's just kind of in the background of consumer behavior. A lot of people use it, but it's never really getting the headlines. And I almost wonder, Tom, if part of this is there's just general meme stock sentiment getting kicked up, and then people are looking for the next thing elsewhere, and they're in
Yeah.
that mindset. And maybe Snapchat's one of those companies where they're like, okay, it shouldn't be this bad.
Yeah, I think that's right. And people are kind of using short interest as their guidepost. They're just kind of filtering for stocks with the highest short interest and then going, okay, I know that ticker symbol. Maybe there's a justification here to get involved. So I think we're definitely seeing a lot of that. But I also think it's just a odd perspective, right? Because you have people de-risking ahead of the September month that's supposed to be bad, but then you also have them buying meme stocks. So it's kind of like this weird dichotomy where it's like, okay, we want to de-risk our portfolios. We're expecting things to be a bit choppy, but then we're also buying some of the crappiest companies out there. Sorry, to anyone that offends, but yeah, it's just weird behavior right now for sure.
Yeah, it's almost the psychology is interesting. You de-risk a little, take some off the table, and then you get that inkling again.
Yeah, yeah, full
Uh,
port into GameStop again. I mean, who
Yeah, what's
knows? Maybe
that?
it'll
Just when
work.
I think I'm out, they pull me back in. So you make
Yeah.
one move over here, and then the casino calls you back, I guess, for some people.
It's all
Um,
about balance, You eat your broccoli and then down a Big Mac meal at McDonald's. You're good to go.
Great analogy. That's a perfect analogy. Let's get into the crypto markets and taking a look at Bitcoin. Sentiments around Bitcoin in particular. I think it was a great summer for crypto overall. Bitcoin reached all-time highs. Ethereum getting a lot of attention on comments from people like Tom Lee. Specific to Bitcoin, though, currently your year-to-date lows, despite a two-day sharp rebound. How is retail feeling about BTC in particular?
Yeah, I've noticed in the last 2 weeks or so, we've seen kind of this shift from digital gold to physical gold. If you look at the gold mining stocks, they're up 90 some odd percent year to date, and basically have had no fanfare up until the last 2 weeks. So people are beginning to notice that, like, okay, other areas that are considered inflation hedges, precious metals, etc., are doing well in this environment. And so I think it's honestly an interesting contrarian perspective here. If you look at the chart of Bitcoin over the weekend, it kind of stabilized around 107, 108,000. And that's after falling from 125K. So people over the last 3 or so weeks have kind of left Bitcoin behind and have instead been trading gold and silver and other precious metals. So I honestly think we're setting up for a good environment here where, while people are not paying attention, Bitcoin, Ethereum, Litecoin, and some of the others can continue to move higher. So that's what I'm keeping an eye on. I'm long some Ethereum and just kind of optimistic on the space over the next few weeks. I'm also involved in the precious metal space. So I was long gold miners, but they reached their 2011 highs. People are taking some profits there because we've had such an aggressive run this year. But we're seeing rotation into palladium and platinum and some of the other kind of precious metals that haven't really moved all that much. So, yeah, I think if the market can avoid completely crapping the bed this week, then Bitcoin and crypto are setting up for a kind of positive move while everyone else is paying attention to other stuff.
Our guest on the show yesterday brought up palladium a couple of times, and it's always interesting. On one hand, we have AI companies in crypto, and then some people's portfolios look like the periodic table of elements these days. So that was an
Yeah.
interesting insight I got from him. I want to go back to crypto, though. Specifically, we talked about Bitcoin, Ether. What about altcoins? Are there any altcoins that are trending in terms of popularity or interest in the community right now?
Yeah, definitely. I think the recent poll we put out, let me check on the results, but we basically asked, are you bullish on altcoins over Bitcoin over the next 6 months? And the answer was yes. And then within that, we asked, which altcoin are you most bullish on? And I think the leader was Ripple. It had
Yep.
like 33% of the vote. Then it was
It's
Ethereum
Ethereum
at
next.
like
So Ripple beat
31%.
Ethereum.
Yeah, which was surprising. I noticed that Solana was way down on the list. It was at like 15%. So I think that's more to do with just kind of the lack of momentum in Solana right now. It's still down maybe 30-ish% from its all-time highs, whereas Ripple and Ethereum are kind of right there. And so I think again, it's less about the fundamentals; it's more just about the recent trading performance. But as we've talked about, the Bitcoin dominance has fallen over the last 2 months from around 66% down to 57-ish%. Based on the way people are positioning and they're answering our polls, it seems like they're looking for altcoin outperformance to continue, which really would only happen in an environment where like risk assets are doing well. So it's very similar to the small cap trade, where if you're bullish on equities and think we're getting a rate cut, you're going to buy small caps. Similar thing in the crypto market. If you're looking for that extra bit of juice, you're going to buy Ethereum or Ripple over something like Bitcoin.
Interesting. Going from the little guys to the big dogs. Let's talk about Google for a second because they've had some ongoing. I mean, I feel like Google's been in court every day for the past few years. I
Yeah.
was at a networking event actually a few weeks ago, and I met someone, and I was like, "Oh, what do you do?" And they're like, "Oh, I do like corporate law at Google." And I was like, "Oh my God!" They're like, "Yeah, I'm in DC all the time." But this is the major antitrust ruling that everyone was waiting for, and a federal judge deciding that Google can keep its Chrome browser and Android system. So, not going to take those harsh penalties in the monopoly case that was brought to them last year. Big win for Google. They were up 9% on the news. Good news also for Apple. Bad news for some of the smaller players, your Perplexities, and even ad tech platforms like the Trade Desk, who would have benefited from more of an open ecosystem. I don't think this was a huge surprise. But I think it was the degree to which they backed off from some of the harshest monopolistic allegations, I think was significant. And
Yeah.
so they're trying to rein in Google's dominance without breaking up the business, which was something that people thought was very likely to happen. Do you think it's over for Google now, and they don't need to worry about this for a while, or do you think this is going to be a continued conversation for them across all aspects of their business?
I think it depends. For the US specifically, obviously, we're in a regulatory environment that's a lot more friendly than it was, just a couple years ago. So I think on the US side, um, they'll continue to get the benefit of the doubt. Where they've had, where the majority of the Mag 7 have had issues is in Europe. They have very strict kind of antitrust laws and just kind of have been a lot more aggressive in terms of their approach toward these companies. So I think the U.S. coast is clear, so to speak, for now. But I think internationally, there's still some open cases and some things that people are keeping on their radar. But nonetheless, I mean, Google's at all-time highs today. The stock is up from below 150 in April to 226 today. So like it's had a nice run. I think it just goes to show that narratives and fundamentals can often not align. The narrative for the last 4 months has been AI is going to kill search, and now we're seeing kind of quite the opposite. Whereas search is now still at the forefront of the conversation. It's performing well, and I think long term there are concerns, but in the short term, I just think Google was underappreciated, and now that some of these obvious headwinds are getting out of the way, people are taking a second look at the stock and going, "Oh man, maybe I should get involved again." So.
Yeah, you almost have to wonder if some of the hype around the demise of Google due to LLMs and AI almost helped their cause in this case. Obviously, separate points of evidence being brought in, but just sentiment wise, all of a sudden, over the last few months, you have Google almost feeling like an underdog in terms of being able to keep up their core search business with LLMs. And I can't help but think that sort of maybe played to their hands here when everything that led up to this case was about them being the most dominant player, and they are still that way. But signs of cracks in the system, signs of LLMs. We had Chris Camillo on a couple weeks ago. If you guys watched, fascinating trends he's watching just in terms of how AI is impacting search. The way people get information is changing. Therefore, the way Google makes money is
Yeah.
changing. So a lot of changes there, but interesting summer for Google, and I'm sure a lot of corporate lawyers are sleeping in today, of course.
Yeah,
Um,
definitely. I feel bad for them, but I also don't because they're probably paid very well. So,
yeah, they're
shout out
good.
to Google's legal team. I think as we're on the subject of the Mag 7, Apple is probably the other one that people are underestimating right now. I know we've had a lot of discussions around them being behind the curve on their AI stuff and just overall, not having the chops to compete in this market. With that being said, the stock has been slowly creeping higher over the last, 3, 4 weeks. And again, this is another kind of story where the narrative sounds right, where it's like, oh man, AI, the last iPhone update was crappy, sell Apple. Berkshire's reducing its position, sell Apple. Like there are a lot of reasons to be negative on Apple right now, but they've got their new iPhone event next week on the 9th. So if there are any material signs that they're making progress on AI, I think this is another situation where you can have an upside surprise in the stock. And it seems like from a sentiment perspective on StockTwits, let's check it out. That's kind of what people are positioning for. We've moved from deeply bearish to more neutral. So as prices have improved, as that event comes up, people are positioning a bit more positive for an upside surprise.
Yeah, interesting from just a storytelling perspective from Apple. These events used to be pretty much like layups for them. They'd have the stage, they'd have cool features, they go out there, oohs and ahs, it's a better camera, it's bigger, it's smaller, it's all these things. We have colors
Yeah.
now. Now they have to do all that. They have to show the momentum of their hero product, the iPhone. But to what Scott was saying earlier, they have to tell a very compelling story about AI and jam that within this event that's really about hardware at the end of the
Yeah.
day. So I can't imagine kind of the manpower, the hours being put into how to paint this picture to investors to shore up confidence in what they're doing in AI, when that seems to be the biggest thing on bears' minds when it comes to Apple is what are they doing with AI? And they have to figure out a way to answer that, and obviously not overpromise at this event in 6 days.
Yeah, and I think within all this conversation is lost sometimes that again it's like the third largest company in the world. So like they've got so much cash, they've got, people are still banging down doors to work at Apple regardless of what, people are saying. So they will figure it out eventually. It's not necessarily like a situation where the business is crumbling and if they don't like get it together in a quarter or two, they're going to be gone. So like again, it's transitioned from like a pure growth story to more of a value stock. It pays a dividend, they buy back shares, like they generate tons of cash. So like, why not get paid to sit around until they figure it out? And I think that's the approach that a lot of people take toward Apple. They own it, they don't necessarily trade it, or kind of like Nvidia. They're believers in the company and they own the shares and will own them for forever. Or they just trade around it if they're traders.
Speaking of Nvidia, I was deplaning last night, and this guy in front of me had Nvidia jacket, backpack, hat, and I was like, "Oh, do you work there?" And he's like, "Nah." And I'm like, "What is going on?" Like, I don't. He just likes the brand. I don't. It was crazy. It was like one of those when you go to Europe and someone's got the full Gucci set,
Yeah.
except it was a literal AI stock. I didn't even ask him what he did. I should have asked if he was a shareholder, but wild times we're in for that to be a fashion statement people are making.
Yeah, I'll look out for the American Eagle Nvidia Jensen Huang collaboration coming soon.
Hey, that's not a bad idea. And I think American Eagle, they're reporting today or tomorrow, I believe.
Yeah,
Um,
I think it's today after the bell. So people
but
will, we've seen from retail a lot of, disparate results. It really depends on the individual company and the execution there. For years it was kind of a general trend of like, is the consumer healthy? Yes, every retail stock will do well. Are they not healthy? Every retail stock will do poorly. But in the last couple of years since the pandemic, as spending has shifted from more goods to experiences, like people are being a lot more selective with which stores they shop at and when they shop. And so it really comes down to execution, making sure you have the right styles, making sure you have the right kind of branding that people are attracted to. So it seems like American Eagle is back on the right track, but yeah, it's a very finicky space. You can be hot with investors, but not hot with the the teeny boppers. And if they're not buying their clothes, then the earnings are not gonna be what they need to be. So we shall see.
yeah, I remember when the Sydney Sweeney deal was announced, AEO, in parallel, research was reported that their foot traffic was down, but the stock was up because people were so excited about that. So you'll see if
Yeah,
that pull happened, last quarter with them. Did that bring people to the stores? We just got a readout actually this morning from PwC, early insights that people are already planning to spend a little less for the holidays this year, which is not a very good sign for some of these retailers. But we had Macy's reporting today, and their shares are up 10%. They absolutely crushed expectations. This is one of those retail stocks that gets dragged a lot. I remember a few years ago, I think Scott Galloway had a lot to say about them and was kind of predicting their demise.
yeah.
But they came in, their earnings were in at 41 cents a share versus the 18 cents expected. They saw specific strength in women's clothing and denim. Denim, I feel like, is having a moment. Levi's reported on the 7th. They had a great earnings. I don't know if you saw my
Yeah.
favorite person ever, Post Malone, now has a denim line. But Macy's that kind of surprised me. I was not expecting that sort of result to come from them.
Yeah, Macy's is an interesting one. This is more of a, hey, expectations had gotten so bad that they are basically on the floor. So their EPS, 41 cents adjusted versus 18 cents expected. So they blew it out of the water. The vast majority of that is cost cutting, right? Like that is not an acceleration of their core business because revenue is 4.81 billion versus 4.76 billion expected. So they just barely inched out revenue expectations. But again, I think Macy's is further along in the process of than say a Kohl's, where they're downsizing their stores, they're creating these more personalized, smaller niche shopping experiences, reducing their footprint, reducing their costs, and it sounds like they're gaining some traffic. It was their best comparable sales growth in 12 quarters. Again, they're identifying the areas that are working for other companies and leaning into it. So, like you said, denim, women's contemporary apparel, watches. Again, these are not just like, you know, 3, 5 years ago, they were just betting on like, hey, we'll just fill the store with crap and people will come in. But once the pandemic changed kind of shopping behavior and people were not in the stores browsing, finding stuff, you have to be a lot more deliberate about what you're putting in your stores and how you're attracting shoppers. So maybe this is, the start of a broader turnaround story, but this has been intact for a long time. There's been a lot of activist investors in here trying to get them to sell off their real estate, and they've staved them off for a while. So yeah, shout out to Macy's. They're up 20-ish% on the back of this, and we'll see if the momentum can continue. It seems like their business is turning around.
Yeah, the retail turnaround seems to be the model. I mean, I get so many ads for J.C. Penney now, and the ads are literally like, "Yes, J.C. Penney." Like that's the whole. It's like, "Yeah, it's us. We're back." Like it's kind of funny. Like, but then yeah, AEO. Everyone wants to be like Abercrombie and Fitch. They've had a little bit of a bumpy ride this year, but I mean, since when I wasn't wearing them in high school because the polo shirts were $65 each and people wore three layered on top of one another. I think that seems to be sort of the model where people are like, what can we take from yesteryear and almost tongue in cheek turn it around and make it cool again. So I don't know, maybe we'll see a hot topic renaissance here in 2026.
Yeah, I was in the mall over the weekend. I didn't necessarily see Hot Topic,
I
full of
thought you were
people,
gonna say
but
you're a big hot topic guy in high school. I
oh
could see
no.
it, like studs.
Yeah, no. Maybe next week I'll show up in some Hot Topic clothes. But yeah, I think retail is an interesting place again where people can identify differentiated situations where a lot of these stocks are beaten down, they're left for dead, nobody's really paying attention to them. And this is probably where like the work that Chris Camillo and others that we've had on the show come in handy, because they're identifying like what are the consumer trends that are actually driving these brands. And so retail is definitely an interesting space, but you got to be careful because these stocks move quite a bit on earnings. So expect some
Yeah.
fireworks from American Eagle after the
Right,
bell.
and your taste doesn't always correlate with the share price. Uh,
Exactly.
you mentioned cutbacks at Macy's. I want to shift over to tech. Salesforce yesterday saying the company has cut 4,000 customer service jobs. I don't think this is a huge shock. I mean, customer service has been something that has been slowly eroded with bots, AI, FAQ pages over the years, but I believe it was they had 9,000 and they cut 4,000 of them. So massive
Yeah.
massive cut there. And in his words, I need less heads. So these executives aren't even skirting around it anymore. They're just saying what it is. But that is a very significant cut within one unit of a company. And as we see in tech, sometimes this can create a ripple effect where other people are like, "Oh, well, they're using AI. We can do the same."
Yeah, I think in Salesforce case, this is actually them directly addressing one of the major concerns that a lot of shareholders have had. I mean, we've been talking about it for years. Like, how many people does a software company need on their books? Like, it's just too many, and I think that's become the consensus. And whether it's Wall Street analysts or Main Street investors, we're all asking the same question. The stock hasn't moved anywhere in 5 years. It's basically at the same price. Every other tech stock has been booming. What changes are you making to get things back into motion? And I think we've seen it with kind of Meta in 2022. They kind of had their year of efficiency and kind of turned things around there. So um, in the absence of spectacular revenue growth or just kind of momentum with their products, efficiency is the way to kind of eke out earnings and drive results for shareholders. So not surprised by this. I also saw I think a tweet or a photo with Mark Benioff with Elon Musk, and he was with one of the robots at the Tesla factory or something. So maybe they'll
Sure.
replace the 4,000 customer service people with some Tesla robots, humanoids. I don't know, but yeah,
Oh,
this is
yeah.
definitely a
What is Salesforce going to do with robots? I didn't even
yeah,
know
I'm
those
not
guys
sure.
were friends. You
Maybe
learn
they're
something.
maybe they're looking to replace the account executive roles, like just replace
Yeah,
the people with robots. Who
or there's going to
knows?
be like a crazy flash mob at Dreamforce or something. They always have some crazy act like the Rolling Stones at Dreamforce that makes you question everything.
Yeah.
Well, Tom, it's been awesome chatting with you. We have so much more content that we're going to be sharing from the Gateway Conference, but I want to get your thoughts real quickly. I mean, you've been in the StockTwits community as a user for a while and now sort of on the other end of things. How significant is it that we're here at the conference in the room? People will be walking off the stage after presenting to institutional investors and sitting down in the chair and talking to little old me. How significant is that for retail?
Yeah, I mean, first off, you got to give yourself a bit more credit there. I think this is a great opportunity for them as it is for StockTwits. So I think in general, this kind of solidifies the movement over the last 5 years that we've seen. Retail is a driving force in the markets as much as institutions. And if you are not catering to that audience, you are being left behind. And so whether it be our partnership down at the New York Stock Exchange or this with Gateway, we are just meeting people where they are and bringing them the insights that they want. Just because they're retail doesn't mean they want less sophisticated, less quality information. They want the same stuff and same kind of research that institutions have access to. And so StockTwits is a great place and a great brand to bring that to them. And I'm super excited. I'll be tuning in, listening to kind of all those interviews, and looking forward to doing even more of this in the future.
Amazing. Well, yeah, guys, follow StockTwits, follow me, follow Tom, the entire team. We're going to be reporting live. We've also shared out some of the companies we'll be talking to, as well as the total list of companies in attendance here. If there's anyone you want to hear from, you want me to chase them down at the bar, in the elevator, hit me up on Twitter. That's what I'm here to do. Maybe I'll pull an Eric Jackson maneuver and hold a sign or something like that. But Tom, thank you so much for swinging by. To everyone else, we will see you a lot this week and back on the Daily Rip Live first thing tomorrow morning, 9